It's Wednesday, May 3rd, 2023. Make sure to like, make sure to subscribe, make sure to hit that bell notification button down below. But forget it, let's not even talk about that. We don't have time to waste. We have a major alert right now. A major bank is collapsing as I make this video. PacWest falls 53% after hours on report that the bank is weighing sale. You can buy a share of PacWest right now for under $2.73. Just to give you a little background on PacWest, that is a Los Angeles-based bank. What do you know? Another California bank. The stock is down 72% this year alone. Deposits have declined more than $5 billion in the first quarter. They're sitting at $28.2 billion in deposits right now as of March 31st. I wonder how many people right now are over at PacWest getting money out of those ATMs or have been pulling money out this afternoon or will be pulling money out tomorrow. Now, will they be sold? Will they be bailed out? I have no idea, but how many banks can be bailed out? How many banks can be bought by other banks? I say at some point you have to let some of these banks begin to fail. That's the way the system was set up. That's the only way the system can work correctly in a healthy way, is by allowing banks who made bad investments, risky investments, they need to fail. They really, really do. And if we keep bailing everybody out, we're going to continue to see problems like this. So PacWest in big trouble right now. They fall 53% after hours. It's under $2.73 a share at the moment, and it could drop even more. But what do you think? Let them fail? Should they be bailed out? Will they be bought up by, who knows, maybe JP Morgan will buy another bank. Maybe it'll be Bank of America this time. Maybe PNC will get this one. But are we just going to keep letting these bigger banks swallow up smaller banks? Where does it end, and what effect is it going to have on the banking system and the U.S. economy? And speaking of the U.S. economy, I want to talk briefly. We did get a 25 basis point rate hike today, no shock. Markets seemed very confused early on. Jerome Powell came out and spoke at his press conference, and the markets were going up and down. Just incredible volatility, and they seem very, very confused for most of this press conference until Jerome Powell came out and said, a long way to go to bring inflation down. It would not be appropriate to cut rates. When he said this, markets absolutely crumbled. Everything went red. Everything closed in the red today. So a lot of people have been hoping and telling us that we would see the Fed cut rates this year. Well, Jerome Powell came out today and said that that would not be appropriate. Would not be appropriate to cut rates. And so I don't think he's going to. Now, could the Fed pause next month? Absolutely. I think it's very possible right now that we see a pause in June, but I still think we have 1 to 2 more rate hikes this year, and we're still going to be in very, very big trouble. And just to briefly, just to paraphrase some of the things that Jerome Powell said today in the press conference, U.S. banking system is sound and resilient. Now, who believes that? I think a lot of people lose all respect for Jerome Powell when he comes out and says something like this. We've just witnessed, 4 bank collapses in the last couple months, and Jerome Powell comes out and says that the U.S. banking system is safe, sound, and resilient. He also said we have a long way to go to bring inflation down. So I don't think we're going to be seeing rate cuts. We may see a pause, but they're going to hold rates higher for longer. He said a decision on a pause was not made today. So he clarified that there's nothing etched in stone that there's going to be a pause. So we don't know. June, we could see another 25 basis point rate hike. And, looking at the ADP job numbers today, higher than expected, you have to think that we may get another one in June. Who knows? It would not surprise anybody. But again, expect higher for longer, ladies and gentlemen. And I believe more hikes are coming. And I know that the market disagrees with that, but the market's been wrong quite a bit here. They said we'd be seeing rate cuts by June. Not going to happen. They said we would see a pause. Possibly, but that's not a pivot. That's not a reverse. They're going to hold rates higher for longer, and that's going to put a lot of pressure on this economy and on the banking system. The hedge today, the banking collapse of 2023 is now officially bigger than the banking collapse of 2008. If you take collectively, if you take the three big banks that collapsed in 2023, First Republic, Signature Bank, and SVB, they had more assets than all 25 banks that collapsed in 2008 did. The big three, First Republic, Signature, and SVB, $548.5 billion in combined assets. This thing, ladies and gentlemen, is far from over. And PacWest today, again, in very, very big trouble. So who's next? Could be PacWest. Zions is another bank that is trading down after hours. We don't know what to expect and who's going to be next as far as what's happening in the banking sector right now. I think that things are much worse in the banking system than we've been told, and now it's beginning to show. And the longer the Fed holds rates higher for longer, it's going to expose a lot of problems in the banking system. Stanley Druckenmiller on America's debt crisis. It's like watching a horror movie unfold. Druckenmiller says the commercial real estate crisis will come and go. Those $32 trillion in U.S. debt growing by $1 trillion every 6 months and $200 trillion off the balance sheet debt will stay forever, at least until the U.S. defaults or hyperinflates. Think about that. We got big trouble, ladies and gentlemen. I don't know about you, but have you seen anything getting better at this point? I still see a major amount of inflation out there. I see people, a lot of people getting very worried right now. I see a lot of people who don't care and have no care in the world, don't seem very worried as long as their credit cards are operating. But what happens when things begin to really get critical here? And when banks begin to cut those credit card lines, those credit balances in half, or start shutting credit cards off completely, what happens? When they begin to realize the risk out there and they begin shutting people's credit cards off, then we have a big, big problem. It's going to be a serious, very serious situation. And the situation today, Mr. Druckenmiller said, the situation today looks much worse than I had imagined 10 years ago. Unfortunately, by still owning a large amount of government debt, the Fed continues to create the false illusion that it can help our fiscal problems. So true. At the first sign of trouble, he said, the Fed last month, in just 4 days, undid most of the small progress they had made reducing the balance sheet. So remember, they were bailing out these banks, pumping in $400-500 billion into the system. So they just undid everything they did with the balance sheet. And so here we go again. Who is on the hook for all this? Who's going to be on the hook for the toxic assets of these banks? Who's on the hook for that $400 to $500 billion bailout? We're going to pay for it one way or another. We're either going to get taxed for it or we're going to pay for it through inflation as the dollar continues to be printed to the moon, and it's going to continue to devalue, giving you and I less and less purchasing power every day. So, make sure you have some assets, get the debts paid off. You do not want to be paying on debt, especially at these rates right now. And credit card debt. Look, 25 basis point rate hike today. That means that mortgage rates are going to go up. You want to buy a car, you're going to need a car loan. It's going to go up. You want to buy something with your credit card, the interest rate on that card is going up. You are going to pay more to borrow money. It's just going to go up, and people are getting so far behind. They're never, ever going to rebound from this. They're going to get deeper. They're going to use more debt to keep their heads above water. They're never going to get out from under this. This is really bad news. Jenny Craig tells employees it will shut its doors. A month ago, they were posting job openings. They've been around for over four decades. Now, Jenny Craig is done. They employ around 1,000 people. They're done. So that's 1,000 people now without a job. And here's another one from CNBC today. Mortgage demand drops as bank failures hit jumbo loan rates. Mortgage apps to purchase a home dropped 2% last week compared to the previous week. Demand was 32% lower than the same week 1 year ago. Refis are down 51% compared to a year ago. Think about the devastation, the carnage that is taking place in the mortgage industry right now. If you work for a mortgage lender, a mortgage broker, good luck. I hope you saved your money. This is going to be, there's going to be so much carnage in the mortgage industry. If you're a real estate agent, same thing. I hope you saved your money. Anything linked to real estate right now, I hope you saved your money. And I will say this again, this has got to be the worst possible time in history to buy a home. You are absolutely paying too much. There's too much uncertainty out there with what is happening right now with the banks, what's happening politically, what's happening with the talk of World War III, what's happening with trade and war with China and things of this nature. There is so much volatility, so much uncertainty out there. This is, I think, one of the worst times to purchase a big ticket item, mainly a house. Right now, it's got to be one of the most awful times to do something like this. Unless you really, really have to, I would say hold off as long as you can and just sit on the sidelines and see how this all plays out. There's just too much uncertainty. We are on the verge now of some serious, serious trouble in these markets. What's happening in banking, prices of homes still have not come down to reality. And you're looking at mortgage rates of 6.5% to 7%. That's with 20% down in good credit. And you're still paying these prices that are so elevated. Why? I don't know. I don't understand why people would do that. I don't get it. Maybe if you were getting 2.65, 2.85, maybe you can pay, on one of these elevated homes. But right now you're paying way over the real value of these homes. You're paying way beyond the true valuation of these homes. And you're going to be paying 6.5%, 7%, maybe even 8%, depending on your credit. I just think it's just ludicrous. It's just the wrong time. We're going to see prices of homes coming down, just like we're beginning to see this carnage in commercial real estate. People are losing jobs left and right. Inflation, cost of living, debt. There's going to be a lot of issues that force people to have to sell their homes, either to downsize, raise capital, move, whatever the case may be, unload some rental properties. There's going to be, and of course, the 1.7 million homes under construction right now. We're going to have so many homes, and we're just not going to have enough buyers, qualified buyers, to buy these homes. Daily Mail, Nordstrom shuts down both stores in crime-ridden San Francisco as Target locks entire product range behind security glass, and Whole Foods store is shuttered. City officials in San Francisco project a $780 million deficit in the next 2 years. California is beginning to go broke. And with a combination of crime and a faltering economy, we're going to see some really bad things here in California. And I pray to God I'm out of here by then. And so many people are telling me to get out right now. I would love to get out tomorrow. I am not going to pay 2021 prices or 2022 prices just to get out of California right now. I just cannot do that. But I know prices are coming down. I know I have to get out of California. This state is going to be in serious trouble between the crime and the economy here and the taxes. It's a complete disaster. It's so sad. It's so sad. But it's not going to just be California. What's happening here in California is already spreading east. It's happening in many of your areas right now. And look, if you can afford to get out and get to a more rural area or get to a smaller town or just get to a better state, then do what you can do. This is obviously the time to do it if you can do it. But the problem is, are you going to pay way more for a house when you know prices are coming down? That's kind of the catch right now. Is I know I have to get out of here, but I also know by buying something right now, I'm paying way over what that property is going to be worth 6 months, 12 months from now. And I hope to be out of here this summer. And I am willing to pay a premium just to get out of here, but I'm not going to pay, $200,000 over what I believe that house is worth, because a year or 2, 3 years from now, when we begin to when we see where prices have fallen, The people who had just bought a house last year, how many? 500,000 people who bought a house last year are already upside down. I don't want to be one of those people. I really don't. So I'm leaving it in God's hands. Please keep me in your prayers that the right property comes up, the right location, and I can get it done. But there's no doubt I am out of here. I'm looking daily. I'm in contact with real estate agents. And so I'm a buyer right now, but it has to make sense, you know. But I'm going to leave it there today. 25 basis points as expected. Fed is not going to pivot. Fed is not going to lower rates. Fed may pause next month. They may not pause next month. Who knows? Comment down below. What's the Fed going to do next? Will they pause? Will they raise next month? Does it even matter? Who cares? The whole thing is coming down, ladies and gentlemen. The banking system is a giant Ponzi scheme, and it is beginning to show cracks in the dam, for sure. No doubt about it. The economy has already collapsed. The banking system is beginning to collapse. And when you look at loan applications, you look at home sales right now, they are collapsing. And it's just a matter of time before prices follow. So comment down below about anything you want. Thanks for watching. Please like, subscribe, hit the bell notification, all that stuff. And God bless every one of you. None of this is possible without you. I would not do this if it wasn't for you. I want to thank all of you for all the support, the great letters, everything, and especially the prayers. God bless every one of you.